Hi, Dave Culmer here, and welcome to segment number 9 of Veterans News. Today we're going to talk about VA loans, buying a home. We have with us in the studio all the way from San Diego, Chuck Spires, who is the president of the Realtors Association from Northern San Diego. Stick with us, we'll be right back. And welcome back to Veterans News with our special guest, as promised, Chuck Spires. Chuck, it's a pleasure to have you come from all the way from San Diego. It's really a pleasure because of your extensive knowledge on home loans and veterans loans. I think everything we talk about will be of significant interest to the veteran viewers throughout the country. We talked before the break that, I didn't know the first VA home loan was made and or initiated in 1944 prior to the close of World War II. Is that correct, when the home loan program became effective?
Yes, it was. In 1944 is when they brought it into being, figuring that the vets would have the money available to them when they came out to get in the housing market.
Okay. One of the things I used to get a lot as a benefits counselor was veterans who received a certificate of eligibility, which we will talk about the certificate of eligibility and how you get it, but on it, it had a certain amount of money, and veterans were confused by the amount of money shown on the certificate of eligibility. Can you perhaps talk about that for a minute, Chuck, with regard to the lenders and the mortgage companies who make loans to veterans?
Right. The original amount that came out was around $12,500, and that's just the guarantee of the loan. The loans are actually through regular lenders put out there. The $12,500 was the guarantee for the loan, or if there would be a problem within the processing of the loan where there might be a foreclosure situation or a vet would get in trouble, then the bottom $12,500 of the loan would be guaranteed by the VA and the lender would be made whole. And over the period of years since 1944 until now, the last actual one that I actually did, and what they call a VA compromise, was in 1993 when the market went bad on everybody else. At that time it was $36,000, which means you could sell the home, the VA would take up the guarantee up to $36,000, the lender would be whole. That way there would be no derogatory credit against the vet himself.
Okay.
That way he could go out and get another new loan, only on the open market loan, not back into a VA unless he made them whole at that point.
Chuck, would you explain whole? Because I don't have any real estate background, and when you say whole, I assume what that means, but would you explain to me what that word whole means as it applies to a VA loan?
Exactly. I'm sorry about that.
That's okay.
What it is the lender lends out so much. But let's put it, say the lender loans out $100,000.
Okay.
And in the process of selling the property, there's not enough money involved in the transaction to pay the cost of sale and pay off the loan. So let's say by the time the lender gets his money, he would only have back $90,000 of his 100. The VA guarantee kicks in and it's paid out of a funding fee. It's like an insurance fee that the VA has to cover that loan, and they would pay the $10,000. The lender would have his full $100,000 back. So the lender doesn't lose based on that theory.
Okay, but as far as the veteran is concerned, the loan you just described would be a loan that would have been approved for a veteran who applies to buy a house under the GI Bill.
Yes, exactly.
Is that correct?
Yes, sir.
Okay, and these are intricate parts of the loan process that essentially the veteran generally never is really involved with, because he's involved with more of the basics: his income, his credit, his references, and the qualification.
Right, exactly. No, that's exactly right. The lender takes care of the rest of the situation for him, and like with the certificate of eligibility, a lender can get that for the vet.
Let's talk about that when we come back to break, Chuck. We're going to take a break and we're going to come back and finish with the certificate of eligibility. Stay with us, we'll be right back. Veterans News. As we said, we're going to now talk about the certificate of eligibility, which is most important. Chuck, this is a thing that a veteran applies for with his DD 214, his discharge paper, to the Department of Veterans Affairs.
Exactly. What it is the vet, it's better that the vet actually go into the VA himself to get the certificate of eligibility. It's a lot faster. They give the vet a lot faster service than they do the lender who comes walking through and says, I need this, and there's a time element lost there. So the vet is better to go directly to the VA office for his certificate of eligibility with his DD 214. Now, somebody that's been just out of the service lately, they may have it on record for the last 8 to 10 years. Prior to that, they may have to search back to see if they can find a copy of the DD 214. But it's critical because that's the beginning of your VA eligibility on a loan.
Very good, okay. And of course, as you've said, if a veteran perhaps is in receipt of benefits currently from the VA, they will have a copy of his 214 if he's at the regional office of the VA in the state where they reside.
Right, exactly.
And they can pull it up for them and then take that to the Loan Guarantee Department.
Right.
Once we have the certificate of eligibility, Chuck, what do we do with that? I want to buy a house on 3rd Street for X number of dollars. What do I do with my certificate of eligibility?
Well, what you do is you take the certificate in your hand and you go down to your local realtor, whatever area you're going to be in, so that you get a specialist that can show you that area.
Right.
Show them the certificate, they'll go through the scenario, they'll get you connected with a regular lender who will do all the qualification process for you. You as a vet really have nothing to do other than give information so that they can show that you're qualified. You've got the certificate of eligibility. The lender knows you're qualified, then the agent can take you out and show you the homes that would fit your budget that'll carry you through.
Okay, so after the certificate of eligibility, then the realtor knows you're qualified, as you said,
Right.
and then he begins to show you properties in the area and region, financial region, which you asked him to show you.
Right.
And so we find a house, and we like it, and do we make a bid on it, or do we say we want to buy it, Chuck, or how does that work at this point?
Okay, what you tell your realtor is, this is the house I want to make an offer on.
Okay,
He sits down with you and makes the offer, presents the offer. It's either accepted, countered, or rejected. Let's say it's an accepted offer. He comes back, contacts the lender, say we have an accepted offer, we'd like to start the full process through, sends them a copy of it, and they start the full process through to go through on this. The vet really has nothing at this point to do. It's sort of almost on automatic pilot until they get a little bit further into the transaction.
okay. So at this point, is this when the veteran's employment record and his record of financial records and his credit records and length of time in employment and earnings, that would all come into play during this time, is that correct? Because that's, of course, the essential part of buying a house.
Exactly. That's when it all starts. That's the process. They'll ask you to fill out some forms to send to your employer, of which you get everything you do in a timely fashion, because then it sets the loan process is very rapidly. Okay? So you fill those out. They send them to the employer. You sign for maybe bank statements that they want to show that. They'll run a credit check to make sure that your credit is fine coming out of that. And then once they start piecing all these together, that's how the lender gets the package together to make sure that they want to do this loan as stated, because they need to know about your credit. They need to know about your job. They need to know about your bank statements and everything like that. So the faster you get this information to them so they can get it to the lender, the better off you're going to be.
Chuck, there's something I need to know. When we come back from break, I want to know about if a veteran doesn't have perfect credit or has a spotty employment history. This is what I want to know when we come back. Can you handle that for me, Chuck? And I'm sure you can. Stick around. We'll be right back. Hi, welcome back to Veterans News and VA Loans with Chuck, our guest. As we indicated, Chuck, before we went to break, we were talking about, or I wanted to know how it will be for a veteran who perhaps doesn't have a perfect credit record, and maybe a guy has a spotty employment history. Maybe he's a welder and has had 4 different jobs in the last 8 years as a welder in the same field. How would that play toward the veteran's credit with regard to purchasing a home under the GI Bill?
Okay. As far as the credit goes, when you're working with the direct lender that you're going to be working with, they have avenues in which to help correct your credit, because a lot of the credit problems are not that of the vet himself, or they may be minor and could have been sent in erroneously or not properly sent in, and they can help them get that straightened out.
Okay. You know, you sound like a vet, Chuck. I know you're a veteran, but our audience doesn't know that you're a vet, but I just wanted to bring that point out.
Yes, thank you.
Very good. There's some other stuff, Chuck, that we talked about during the break, and the amount of down payment that's required when a veteran buys a house on the GI Bill.
Right. On the GI Bill, it's a zero down type loan. Okay, there are points involved, but the points would be paid by the seller of the property.
Okay.
And it can be incorporated in, depending on how you work your transaction, the numbers, the sale price, and everything like that. It can all be worked in that fashion on the zero down. And in the VA loan, there is a loan called a VA no-no, which means the vet pays zero, nothing out of his pocket. Everything else is paid.
That's called AVA no-no?
It's called a no-no because he pays nothing.
Oh, I see. Okay.
Everything else is paid by the seller of the property or the lender involved in the transaction.
Well, how would a vet get a no-no loan?
What they do is they talk to a lender and say, this is the way I want to go. I want to put no money up front. I don't want to put any money out of my pocket. And that's how they structure the transaction when they make the offer. They structure it that way so that all the fees are paid and they're bulked into the sale that way.
Okay.
So that way the vet is not paying anything.
So when you enter the deal, you got to say, this is what I want.
Exactly.
Okay, and so without saying that, that's not what you're going to get, which is normal business.
It's normal business is a regular VA, nothing down, and there's going to be some cost involved for the vet.
We're going to talk about the inspection of the property, so when the veteran, all the papers are signed, he doesn't have a problem with problems with the house. So to preclude that, we have an inspection prior to the signing of all the documents and papers. How does that work? What is that security for the veteran?
Right. Within all contracts in all states, there's a time element in which to do, it could be 10, 17 days, in which to do your inspections. And what you do is you hire a home inspection company. They're licensed in each individual state. They come in, they do a full inspection of the property. They tell you what they've found, whether there's nothing wrong, whether there's some minor infractions in the property or some major ones. And this tells you how you have to go forward. You can ask the seller to fix these. If it becomes a major problem and they don't want to fix them, then the vet can say, well, I'm out of the deal.
Okay.
And this is all done prior to your closing and the time element that's set for inspections.
Okay. And so now you have an inspection made, and all of the discrepancies, if any, are shown in this inspection that was made prior to the signing of all the papers.
Right.
Okay, and again, to reiterate what you said, the veteran has the option of accepting the house, or the owner, the seller, repairing it, or the veteran backing out.
Exactly. That's exactly right.
So those are the safeguards.
Right.
Okay. Another point, Chuck, since I have an expert here, and I'm so glad you're with us, is the upper limits of a home. Assuming the VA goes to $359,000 now, if it hasn't increased, if a guy wants to buy a house for $500,000, how would that work if he wants to go VA?
Okay, what they would do is they would buy the loan down. You would take the down payment to be equal to whatever it takes it from $500,000 down to the $359,000.
Oh, okay.
So you can buy the loan down to that and then continue on with your VA loan.
All right, so in this case, he would have paid $150,000 roughly, and the home is now being sold for $350,000, and he's paid $150,000 to bring the loan down to the point that the VA would finance or the VA would guarantee the loan.
Yeah, they would bring it down to the $350,000. I think it's $359,650, and it brings it down to that figure there. Then it's the VA loan is $359,600. It has a guarantee behind it that way.
Very good. One other question, Chuck. there's a ratio of thousands of dollars you can put down as to how it plays on your monthly house note. Can you speak to that? In other words, I think if you put $1,000 additional down on a house, how much it would reduce your monthly payments? Is that something you're familiar with, roughly? I don't mean specific numbers.
Right, just roughly, if somebody comes in with an additional, say, $10,000 down, and to bring a loan down like that, realistically, the vet would be better to leave that $10,000 in the bank to protect himself, because the amount that the payment is going to come down over a period of 30 years is only going to be something like maybe $30, $35 a month.
Okay,
So
that was my question.
Right, he's better to protect himself.
Chuck, we've covered a lot, and we've got a lot more to cover. Listen, would you be able to come back tomorrow, Chuck, and finish this up? Because there's a lot of good information that I think would be available to veterans and their significant others.
I'd be glad to, Dave.
Thank you so much. Chuck, it's been a pleasure.
Thank you.
Very good. This is Dave Culmer, Veterans News, out.